Welcome to ETM Analytics' first take of the market. So as per usual, I'm joined by Director George Glynos. George, thanks for joining me. There was at least one good thing that came out of last week. The national dialogue has met its end even before it got off the ground. So, because like we've said previously, I think the only people that really thought that this was going to be a pivotal moment were confined to the precincts of Parliament, right? Like South Africans we're beyond talk. Okay, we're beyond dialogues. We know what the issues are. We just want to kind of move forward. But speaking of political circuses, the one that never stops giving, apparently, out of Washington, they came out also with a range of new visa restrictions on a number of African countries. South Africa excluded from the list, at least for now, because we're still trying to figure out a way how to approach these tariffs. With Trump that's been imposed, we know they are going to brief us tomorrow on it. But how would you play it? George, how would you maneuver the tariffs with Trump?
I mean, it's so difficult. You've spent the last 10 years taking positions that are diametrically opposed to those of the US, and now you want to sit down and have a nice, cordial conversation. On top of it, you've had an ambassador that didn't exactly do us any favors. You've got a special envoy whose credentials were rejected. We don't have people that can actively communicate on our behalf. We're trying to negotiate, and the negotiations are obviously proving difficult because of the backdrop. So how do you recover from a position like this? Well, the one thing that you have to do is be strategic about it, and focus on what South Africa can do for the US, because people can hate the US all they like. They can hate the Trump administration all they like, but the reality is that the US is an important trading partner for this country, and people can twist it and shape it however they like about focusing on South Africa's sovereignty to be able to take whatever decisions that it wants. Yes, of course we can. We are a sovereign country. We can do that, but then there are consequences. This idea that you can just be your own entity and take whatever decisions you like, and that there's no fallout from bad decision making, is ludicrous. So just like the US, just like South Africa is its own country, so is the US, and they can do whatever they like. And unfortunately for South Africa, they are the ones that hold a lot of influence, both geopolitically as well as economically. So it's in South Africa's interest to try and come up with some sort of a solution. Strategically, obviously, minerals works in South Africa's favor. Some of those exports to the US have already been been negotiated, and we don't have tariffs to pay on those kind of minerals. So that's at least something positive. But then I think we also need to use, as they say, never let a good crisis go to waste. We need to use developments like this as a trigger, if you like, or as a catalyst to focus some of our attention internally, and to rethink some of the strategies that we've had. Just because something applied to the country 20, 30 years ago doesn't mean that the same policy with no changes should continue to apply now. And of course, I am referring to things like BEE and expropriation without compensation, whatever. They really haven't done this country any favors. So persisting down that road is just a fool's game, in my opinion. And so, if this is an opportunity to perhaps start the process of reassessing the benefits to the country overall, then I think that's what we should do. And I did notice that John Steenhuisen was talking about some BE reforms. I'm going to be interested to see what they are. It's a pity it's coming from him and not from somebody within the ANC, because one might have given it more credence or given it a higher probability of success if it had. But at least we're able to talk about these things, and that's one positive that's come out of it. So how do you placate a Trump administration? Well, I think you play to some of the concerns that they've had, and you show them that following the negotiations, that you have taken their concerns seriously, that you are looking at ways that you could reform some of the policies that we have. And make it clear to them that their concerns were some of the major catalysts to bring this about. And I think you give Trump an off-ramp. you give him the ability to be able to just soften their stance on South Africa if it looks like South Africa is still interested in being a friendly trading partner. And so that's the way that I would play it. Be strategic, think about the benefits to the country overall, leave political ideologies to one side, and just focus on what's right for the general population in this country. That's where I would start and end, and use it as a catalyst to implement reforms.
I've said this from the beginning. You have to go and you have to polish his ego and come with a transaction in your back pocket. If you can find a transaction that's going to make him look good on the world stage, he's likely going to take it. So that's hopefully how administration will approach it. We'll obviously find out tomorrow, and this is all playing out with the tariffs, and everyone's kind of still waiting for the impact of the tariffs to really come through. We know the SARB's expecting that it will shave off, I think it's 0.1% of GDP, which doesn't sound like a lot, but for a country struggling to reach just 1%, every 0.1% really matters. Obviously other estimations have put it even much bigger than that. I think 0.2, 0.3 percentage points could come off GDP, but that to one side. The other question that keeps popping up is, despite the uncertainty with Trump, with the tariffs, despite tighter monetary conditions, equity markets, they remain robust. And I'm scratching my head a little bit as to what's really driving this.
Yeah, it's interesting, isn't it? Because we can't really put it at just monetary policy anymore. Quantitative easing ended quite a long time ago, and in fact we've been quantitative tightening for quite a while, and as you've mentioned, there are many big economies around the world whose credit cycles have tightened. So it's not necessarily from a monetary point of view, but when you dissect the makeup of the gains and the support for a lot of these equity markets, you'll find that it's quite concentrated. So it's concentrated in very liquid stocks. Most of them, at least on the US bourses, for example, are the big tech stocks. And the big tech stocks have been focusing increasingly on AI. And they've been utilizing a lot of their dry powder and leveraging their balance sheet to invest very heavily into AI technology. And the AI technology is extracting tremendous amounts of productivity. And that productivity is not just good broad-based, but it's helping to keep costs under pressure across corporate America and in fact corporates worldwide, and ultimately if you can marry that up with some good returns, in other words, companies can contain their costs and still generate the productivity to increase their top line, and then all of a sudden some of these earnings calculations make a little bit of sense and keep supporting these very buoyant markets. But there's a tremendous amount being invested by the top 10 tech stocks into this new technology, and I think we need to be aware that there is this huge theme that's unfolding not just in America but worldwide, which is going to affect all of us in a positive way, from a growth, earnings, etc. potential, and that's great news. The other positive is that as you increase productivity and you increase efficiency, so you also introduce a disinflationary environment which allows the central banks to ease monetary policy as well. So you've got the lower interest rate environment tends to boost your asset prices, in the same way it does for bonds, it does it for many other asset markets too. So you've got a couple of these factors that are assisting stock markets. Then, of course, you've got the weaker dollar, and the weaker dollar has been a boon for commodity prices, and commodity prices tend to help those countries that have got a strong commodity base, South Africa being one of them. And if you have a look at our resources index, it's done exceptionally well. And that too has helped prop up the JSE, for example, and helped it to go from record to record. So there are numerous factors in all of this that are still playing a role. I think if it's just one thing that I would be a little bit concerned about, is that there are some markets that are, and whether you look at the shape of the yield curve, or if you have a look at the corporate credit spreads, that they are pricing for recessionary type conditions at some point, and we're starting to see one or two cracks showing up in the labor markets. But whether or not this is going to be a big downturn or more of a shallow downturn, which people might just use as buying the dips opportunity and off we go to the races again, that's the big debate at the moment. And for the time being, it looks like people are generally a lot more optimistic on the future than they have been, and much of that I think is tech driven.
Yes, definitely. Well, that's very interesting, but it's something that we will obviously keep track of. There's no major releases set out for this week, perhaps just some manufacturing and retail sales that could provide context, especially if you want to monitor kind of that against the backdrop of tariffs that's coming into effect. But George, thank you very much. We will, of course, catch up again next week, hopefully on the back of the first Springbok win, right? Starting this Saturday.
No doubt.
So great. Thanks, George. Keep well.
Thank you, Ilze-Marie.